The Seed Enterprise Investment Scheme, or SEIS as it's known, is a government scheme that allows investors to invest in small, young companies and receive generous tax relief. The companies in question have no more than £200,000 in gross assets and must have been in existence for less than 2 years. Technology is one of the most common areas for SEIS, as these companies aren't often capital intensive. But it's not just about technology. You can also get other businesses from life sciences to music companies or movie or cartoon producers. You can invest in a single company or in a portfolio managed by a professional manager. The maximum you can invest in SEIS in one tax year is £100,000. So what are the tax reliefs and how do they work? When you invest in shares in an SEIS qualifying company, you get income tax relief of up to 50%, providing you hold the shares for at least 3 years. Invest £10,000 for instance, and you will receive £5,000 back, assuming you've paid or are due to pay sufficient tax in the first place in that tax year. Any profit made when selling your SEIS investment is free of capital gains tax. By investing in shares in an SEIS qualifying company, you can also wipe out half of a capital gain. So if you have a capital gain of £100,000 and a capital gains tax bill of £20,000 this year, invest £100,000 in an SEIS qualifying company and you could completely wipe out £10,000 of that CGT bill. This means, in this example, £100,000 investment in an SEIS qualifying company could save you £60,000 in tax when adding the income tax relief to the tax saved by halving the capital gain. What happens if I lose money? Because the government wants people to invest in younger, smaller businesses, it offers very generous tax relief which can help cushion any losses and amplify returns. With SEIS you get tax relief not only on the way in, but also if you lose money. You can write off any losses against an income tax bill. This means if everything went wrong for an SEIS investor who'd claimed all the tax reliefs and they lost their whole investment, the actual loss to a 45% taxpayer would effectively be just 17.5 pence for every pound invested. For full details of loss relief and how it works, please take a look at our website. The final tax relief on offer gives freedom from inheritance tax, as long as the SEIS is held for at least 2 years and at the point of death, potentially saving a 40% inheritance tax bill. However, SEIS are very risky. You are, after all, investing in very small startup companies, which are statistically more likely to fail. In addition, the investments will be illiquid, which makes them difficult to sell. To keep the benefits, you need to hold your SEIS shares for at least 3 years. A professional manager can help navigate that risk, and if you invest in a portfolio rather than a single company, you can get some diversification. If you're unsure, you should seek specific advice about the tax benefits. Like all investments, SEIS can fall as well as rise in value, so you could get back less than you invest. Capital is also at risk. You should also remember the value of tax benefits depends on your circumstances and tax rules can change.